Hi there, it's Bill with Smart Trades. It's Wednesday, May 18th, around 10:35 a.m. Pacific time. And just a disclaimer here first, these charts were originally posted yesterday around 9:40 a.m. Pacific time. That's Tuesday the 17th. And if you'd like to get more timely updates, please subscribe to my service at smarttrades.com. And again, these charts are all somewhat dated. They actually were posted along with my analysis yesterday around 9:42 a.m. Pacific time. At any rate, today's the 18th. It is again around 10:35 a.m. and here is the S&P futures. As you can see, the weekly trend line has held. Yesterday I had mentioned this, and here we are with the S&P cash, and again that same trend line is holding, and the decline so far to me has a lot of the earmarks of a corrective decline. Indeed, if you look at it on a daily chart, you can see here we've got an ABC decline. Here again is that weekly trend line. So far we've held. We also have a relatively low reading on our ADX. That's the black line in the background there. That's indicative generally of a corrective decline. I don't think this is written in stone by any stretch, and I still do wonder if we're not going to go lower, but the pattern to this point looks corrective in many different ways. This is a 240-minute chart of the 24-hour futures. Again, here's that same ABC decline, and you can see indeed C has formed a bit of a wedge on this decline, and it's held right at or just below the bottom of that wedge on this post from yesterday. Here is the hourly chart. Breadth ratios not spectacularly diverging in a bullish way, but they are diverging. And again, if you take this parallel trend line, line it up with the low closes on the cash, we held just about right on there on a closing hourly basis. Now, in order to prove that this is a corrective decline, we need to take out this B wave up here towards 1360. On the futures, it's a little lower than that, I believe about 1358 and change, and that would be a strong indication that indeed this is a corrective ABC and that we are going to perhaps make new highs. Again, remember my tentative target's up around 1375 to 1380, assuming that indeed this decline holds. Coming in, in sync with that are the commodities and the currencies. And this is the Euro FX, and as I noted yesterday, we had a what I believe was a B wave, or a part of a B wave low here, and it looks like we're going to rally up ideally perhaps to 144, maybe 145, perhaps a little lower than that. There's a shelf of support and resistance from previous swing highs and lows, and that's consistent perhaps with a bit of a stock market bounce. I don't think we're going to make new highs in the commodities in general. Here's silver. You can see the what looks like an impulsive decline in silver, and we are bouncing a bit here today. Here's crude oil with the labeling, and we have what I believe is a wave 1 down, an A back up, perhaps a B wave low, and crude is also bouncing today. And finally, bonds. The bond market I've noted for some time looked like an ABC rally. I was looking at that 126 area as a potential resistance in the top of that ABC channel. And I believe we got to about 125.27 today, and we've rolled over a bit from there. So a little caution on the bonds here. It makes sense that perhaps they're going to at least have a bit of a corrective decline if the stock market rallies. So, and here's the TLT, 20-year bond fund, and they've rolled over today to basically the same pattern, obviously different pricing than the bonds themselves, but the same basic ABC pattern up to the top of that channel. And as I say, it has rolled over a bit today. So at any rate, just a quick report today. And again, if you'd like more frequent updates, please visit smarttrades.com and subscribe to my service. Thank you so much for watching, and have a great day and a great week ahead. Thanks again. Bye-bye.